Maybe somewhere down the road.
Good morning, everybody. Happy Thursday. It's May 11th, 2023. Great to be with you today. My name is Bob Lang, and it's time for our daily bites. Sorry we're running a little bit late, but I had to take a look and see what the inflation data looked like and figure that out, jobless claims and a few other things. But we're back together again, and we're going to talk about markets here. So as of right now, we see the futures are down a little bit. They popped a bit earlier this morning. It doesn't seem like there's much of a bid so far. In fact, there hasn't been much of a bid in the market for the past 2 days, 2 sessions. We'll get to that in just a minute. Nasdaq up a little bit and has penetrated that 13,400 level, which has been some pretty stiff resistance for the past couple of months. So we do see volatility up a bit this morning, which is kind of unusual after we had the release of the PPI number this morning and jobless claims. We normally have seen volatility dropping after the release of a number, regardless of whether it was good news or bad news. Like yesterday morning, we saw the release of the CPI number came in basically in line, and we saw futures taking off, but then pulled right back down again. So maybe that particular style of rallying on news, whatever it is, good news or bad news, is over. We'll have to find out. We'll have to see what's going on here. But for the most part, markets have been pretty well bid coming into the morning in most days. Yesterday we saw a really good bid into the markets, and we pulled back down sharply, but rallied right back towards the end of the day and closed near the session high. So let's take a look at things over here. So we see a couple of names on the board here. Google, we're going to talk about that one a little bit later. AMD. Alibaba as well too. Trade Desk, we're going to take a look at those names just a couple of minutes. See, Apple's up a tiny bit. Amazon, name that we picked up yesterday, up as well too. But as it relates to Google, Alphabet over here, I did put this out there as an idea for everybody out in Twitter yesterday, Twitter land. We had bought the July 90 calls at 11, sold those yesterday at 23, and we ended up buying some August 115 calls at 635, and that so far is working pretty nicely. And of course, if at Google, it looks like it's up about $3 today, almost $3 today, so should get a nice little pop on those calls later on today. Hold on one second. Let's talk about the markets a little bit here, and we have I'm going to show you the new highs, new lows here. I'm just picking and choosing some of the areas that I find of interest here. We see new highs, new lows. Last week really took a tumble on the new lows, really expanded widely versus the new highs. And we see now that things have started to stabilize a bit. The S&P 500, of course, still remains trapped in that range here. And you can see significant resistance at 4,200 right there. And then even a little below there, well, call that 4,200, and then slightly below there at about 41.75. So, until we break out of that range here, we do have a nice uptrend here as well too. And we're slightly under that right now. If we get up a little bit higher close here, that could make a run through that resistance level. Cloud is strong. You see indicators are starting to soften a little bit, not only because we had a big rally from early in April, and then we kind of went sideways. That late rally in March is still being worked off, burned off, consolidating. Another couple of things I wanted to show you here was I mentioned about yesterday's action. So let's take a look at the internals here. So this is very interesting. Take a look at the internals here. I call this the octagon. It's in 8 boxes of internal measures that we look at regularly during the day. Dave Attardi put this together for us. And I told him some of my favorite things that I like to watch, indicators, and he consolidated it, put it all together, put call ratio, the trend, the VIX, the ADD, the VOLT, of course. So what we're seeing here is we're not seeing big moves. We said, of course, this is last Friday, but then really muted moves here in the VOLD. Here's that big move on Friday. Again, muted moves on the accumulation distribution over here. And the ticks rather even here with the up and down. You see the green arrows versus the red arrows. But what's compelling here is since Friday, that when that VIX dropped sharply, we haven't made a big move up, nor have we made a big move down. So we're really just kind of in this really tight volatility range here. What does this mean? This means that we're likely to have 1% moves or less. Yesterday was a little bit more than a 1% move, of course, from high to low, but we're more likely to have 1% or less moves. Monday was a really super tight range. We only had about a 16 handle move from high to low. That in and of itself makes for a dangerous condition in the markets. Why is it dangerous? Because it portrays a lot of complacency in the markets. What is complacency? That means when people are not fearful enough and worried that the markets are going to go down, and they tend to put more capital to work right at the very wrong moment when markets are going to turn south. So I'm not calling for a turn south, but I'm just saying that the markets are vulnerable up here. We're at the top of the range, as I showed you. And being at the top of the range 4 or 5 times already has meant that markets would turn back down again. We did make higher lows, though, from the last 2 times around. So we'll see if that holds here and comes back. So news is out of the way. Of course, PPI is out. We have a couple more pieces of news coming out tomorrow with consumer sentiment and a couple of other later on today. We have a Fed speaker out today and one out tomorrow as well too. So that's going to possibly influence markets too. So as it relates to stocks that I'm watching here, and if you guys remember on Monday's Daily Bites, I talked about 2 names in particular that I liked. One of them was McKesson. And that stock really took off after earnings on Tuesday, Monday night earnings, Tuesday, big move up there, and followed through on Wednesday. So if you played that one, you made some good money. I played that as well too. I got about a 200% gainer on the calls, and then also Celsius, CELH is one that really had a sharp move up. This is one that I talked about on Monday as well too as a potential call play. Listen, if you're not listening to the Daily Bites, if you're not in the chat room, I ask why not, first of all. Second of all, if you're not listening to the Daily Bites, you're missing out on ideas here, right? I don't give everything. I don't give away the whole store. That wouldn't be a good business decision. But you know what? From time to time, put trade ideas out there, and sometimes they work, sometimes they don't work. But in this particular case, these 2 looked very, very strong. So what do I have on my mind here today? So Trade Desk, which reported earnings last night. We'll see if they can make a move above that $70 area in the next couple of sessions. Doesn't have to necessarily be today, but you can see where we have some resistance right here, and the next resistance level it looks like it's going to open up higher than the February high. So we're looking back at the August and September highs coming in on the Trade Desk, and that's about $70 here, where it turned back down. So we'll see if we can get a move up there, get to an overbought condition, and maybe make a run into the mid-70s eventually. I also had talked about Alibaba, which is strong early this morning. It looks like it's trying to build a base down here in the $80 to $85 range, right? If we get above the $85 range, we can make a move up towards that 20-day moving average. This is not a chart I get excited about here, but certainly if it gets above that $89 or $90 level, then it's got something to work with. We aren't quite oversold here yet, but if we get down a little bit further, if that $80 level breaks, I think if you're long this stock, you got to let it go, because it's got some pretty serious downside targets down here in the 60s range. And then finally, see what else was I looking at here. Google, I said, GOGL, and then gold is actually very, very strong here today. Let's look at the Google chart for a minute. Again, this stock, we're looking to see the stock get above 110. It went above there for literally a moment on Tuesday, but closed sharply higher on Wednesday, and it's following through today. Where's our resistance at now? Our resistance comes in at about call it 123 to 124 from back in last summer, late summer, early fall. And there's plenty of room to get up there. Not going to get up there today or tomorrow, but it certainly could get up there over the next few weeks. We're not overbought here. In fact, actually, the weekly chart looks even just as impressive as the daily chart. You can see that here. It's starting to make a move. It's made a series of higher highs and higher lows after making a nice bottom over here, double bottom here, back in late fall last year and early part of 2023. Again, this stock can make a move up towards that 122, 123 area in very short order before running into resistance. Again, the weekly chart is not overbought at all, and the other indicators are starting to look positive. So that's a couple of names, a couple of ideas for you. We do have plenty more coming out in the chat room, and if you're not in the chat room, then make it a point to come on in to the chat room. Real quickly on the inflation numbers, core inflation came in mostly in line. Year over year was slightly better than estimated at 3.2 versus 3.3. Jobless claims increased. PPI month over month, a little better. PPI year over year, a little bit better. And ex-food and energy better than last month as well too. So pretty good numbers for the PPI. We'll see if the market can react a little bit later on to that. We did hear the Bank of England have raised interest rates this morning. Not a surprise by that. So have a great day. Have a great weekend. Keep some puts on. All right. Always keep some puts on in the bear market. And I'll see you guys all back on Monday. Take care. Have a good trade today. And if you're in the room, I'll see you in the room later.